Hey y'all, this is Howie. Welcome back to Howieverse. I believe this AI play ASML stock will surge by Q1 2026. ASML is a monopoly in chip manufacturing equipment, one of the most important company in AI ecosystem. Without ASML, AI growth will not going to happen. No other company in this green earth is coming close to ASML technology. In this video, we'll discuss why ASML stock will grow from AI boom in 2026. First, let's look at the earnings to be expected in Q4 2025, which the report will come out in Q1 2026. So in terms of revenue for Q4 2025, it's expected to be $9.5 billion versus in Q4 2024, it was reported $9.26 billion. You take the ratio between the two, we got around 2.5% increase in revenue. And I believe in terms of revenue, ASML is going to do more than 2.5% increase. From the EPS side, Q4 2025, the forecast is 7.53 EPS. And for the 2024 Q4, the reported was 6.84. So this is about 10% increase in the EPS, which is expected. So there are more in the bottom line for the expectation for ASML to perform. And for this reason, I believe for the EPS, it's also going to beat for the ASML due to the services that they provide to the other companies that yield higher margin rather than selling the hardware or the equipment. Also, if you notice that all the Q4 for revenue and also for the EPS, there is a spike in the numbers, right? For example, in the revenue itself, we see the Q4 2025 and Q4 2024. There are a lot more in terms of revenue or EPS than the Q1, Q2, or Q3. This is because several behavioral pattern in terms of the company expectation. For example, like the seasonal customer purchasing pattern. So the customer of ASML often exhibit cyclical purchasing behavior that favor the year-end spending, right? A lot of the semiconductor manufacturing operate on calendar year budget. So by the end of the year, they tend to want to spend their dollar. And also in the shipment timing itself, ASML internal practices around shipment and revenue recognized also contribute to the Q4 every single year. And also the backlog. The backlog is really important. The company operates with a larger order backlog and lead time to build shipment and installation for all of their lithography system span multiple quarters. Orders placed in the first half of the year often convert to the second half of the year or towards the end of the year, which is the fourth quarter. With that being said, low expectation in revenue and EPS will send the stock higher if the company can achieve a lot better than expectation. I believe the company will be able to beat these numbers due to the demand in not just any chip manufacturing, but advanced chip manufacturing. ASML products are the only equipments that can print advanced chips, which lead to better computing facility to house advanced AI algorithm, which I had talked in length in other videos. NVIDIA and AMD are going to build gigawatt facilities. These facilities will house advanced AI chips, which ASML products are the only equipment that can print these AI chips. The next thing we'll take a look is the Q3 2025 report. By knowing the Q3 2025 report, hopefully we can get a glimpse of the Q4 2025 outlook, or better, the next year outlook, which is 2026. Right. So the first thing that we'll see here is the net sales. The net sales is kind of underwhelming, where it decreased by about $400 million worth of system sales. However, it compensates by the net service. So the service itself has a higher margin. Due to the higher margin that compensate for the net sales of the system, that is down $400 million. And thus the net income, if you see the bottom line, it's improving, right? So net sales has better margin than the system itself. You can think about the hardware. The hardware has a lot more cost associated to selling the hardware. Thus, the net income reduced by the net system sales is compensated by the net service sales. And the other thing that we want to see is that the research and development cost is not increasing that much, and also the SG&A is also not decreasing that much. In my opinion, this is kind of flat. And what you notice here, they do not spend any money on marketing. So this is really good, right? This is why you tell a monopoly company is a monopoly company, is that they do not advertise themselves. People just come to them to buy their equipment, to purchase their services, and so on and so on. And they do not spend any money in marketing, and all of the money that do not spend in the marketing goes down to the bottom line of the company. So they do not need to advertise themselves to other companies like TSMC or other foundry companies. They just know the product, the ASML product, is just the best of the best out there. The next thing we're gonna see is the gross profit as percentage of net sales over here. And it is encouraging that we see that it increased to 51.6% from 50.8%. And for the 9 months is 33.1% from 51.1%. So the gross profit is improving. Like I said, that is due to the net sales in service versus the hardware that associated with higher cost. And also the net income that you can see is increasing as well. And for the 9 months, it's improving by almost 4%. This is really, really, really encouraging, where if they can capture higher services that is going to have less costs associated with selling the service, then they can have higher profit margin. And you can also see the net booking for the Q3 is increasing by almost 2x, or maybe more than 2x, right? So this is really encouraging, where it is going to go into the backlog, and the backlog is going to be improving. And since you have the backlog, it's easier for you to see the outlook for the next year, since you have job lining up for getting the revenue from the customer. For the cash and cash equivalent, it is dropped by more than 50%. This is kind of concerning, and would like to inspect why is that. And I will tell you why this is the case, right? So this is from December 31st, 2024, and now is September 28, 2025. So they have been deploying their cash into research and development, also buying the equipments to assemble their system. And another thing to notice is that their long-term debt is decreasing from 3.6 billion to 2.7 billion. So they have been reducing their long-term debt as well, using the cash and deploy it into good use. Notice that the cash, right, it was 12.7 billion and now is 5.1 billion. This is due to the nature of the cyclical itself that we talked about earlier in the video, where usually in the Q4 timeframe, they are racking up all the order and they are getting all the cash in because they've been fulfilling more orders or they're taking more of the cash from the customers, right? And then after the year goes by, they're spending their cash and deploying into good use, right? And then if you take a look at the debt itself, and the long-term debt has been decreasing quarter over quarter, which is really good. In this quarter, they have been doing a really good job to pay off their debt. Now we'll take a look at the press quarterly report. And in this case, we see the Q3 total net sales of 7.5 billion euro. Gross margin is 51.6%, and net income is 2.1 billion, which is really good. And this is what's more important is that the quarterly net booking in Q3 of $5.4 billion, in which of 3.6 billion is in EUV. So the EUV is their more advanced equipment, and it's really encouraging to see that more than half of their booking, the demand is towards more advanced equipment, which they can sell a lot at a lot more higher margin. And if they keep expiring all of their previous version of their equipment and they can yield higher level of advanced equipment, this is really good where it is just going to increase the moat of the company and is going to become a more of a monopoly. And ASML expected a full year of 2025 total net sales increase around 15% relative to 2024. And I believe the company is going to sandbag this and it is going to perform a lot higher than 15% in my opinion, because usually company do not set the expectation too high so that they should be able to beat it easily. And the reason why this last thing is really important, right? So ASML does not expect 2026 total net sales to be below 2025. What happened in the previous quarter is that they're saying that they cannot expect anything in 2026. That is because of the tariff or the international policies. China is ASML regions that produce a lot of the high advanced chips. And in order for them to produce a lot of their chips, they need this ASML equipment, right? And due to the international policy, ASML previous quarter said that they cannot expect anything in 2026 due to this reason, and the stock just tanked. So this time around, they're saying that ASML cannot expect anything in 2026. However, the 2026 is not going to be below the 2025. So that kind of set the tone for 2026, although we cannot expect anything, but it is going to grow. The company is still going to grow. The last thing that we're going to discuss about is for the backlog. It says for full year 2025, the company anticipates a 15% revenue increase compared to 2024, which we talk about. However, this growth trajectory is underpinned by a record order backlog of $36 billion. So by knowing the backlog, we know where the company is going, and it offers the visibility of sustained revenue streams. And another thing that is really encouraging here is the development of the high NA EUV. Like I said, this is their most advanced equipment that can print chips, right? Lower nanometer chips. Expect to enter high volume manufacturing by 2026. The only companies that are manufacturing this equipment is ASML. The next thing or the last thing we're gonna talk about over here is the competitors. It says here, it's kind of funny. ASML is not without competitors. Companies like Canon and Nikon are exploring alternatives such as nano imprint lithography. And then they said the high barriers to entry, both technology and financial, ensure ASML dominance remains unchallenged in the near term. So there is competitors, but the technology advances because ASML is so much ahead from other companies that you can ensure the technology for this high NA $400 million aperture is not going to be challenged in the near term. And also in the financial term, because this is a 150 to $200 million equipment. So if I'm the customer, if I am the companies that wants to buy this equipment, I need to trust the other company that is going to deliver, right? So if I'm paying this much money and the equipment sucks, then that hundreds of millions of dollars just go down the drain. And since ASML is the only company that has already prove itself year after year, over quarter, that they can deliver high performance high performance hardware. A lot of the companies going to trust ASML more because of this reason. Hey, let me know in the comment below if you think ASML is going to grow a lot more in 2026. In my opinion, by Q1 2026, ASML stock is going to surge due to the spectacular earning in the Q4 2025. In conclusion, we have discussed why ASML is going to grow in 2026 as soon as Q1 2026 due to AI demand. I believe 2026 is the year of AI. As mentioned, AMD and Nvidia, they are building gigawatt computing facilities which are going to house advanced AI chips. And ASML products are the only equipment out there that can produce these advanced chips. ASML is also entering high volume production or manufacturing for their latest and most advanced EUV equipment or system in 2026. In addition, if the international tariffs conflict can be resolved, we can see higher growth rate than expected that becomes tailwind for ASML. Like this video and subscribe to the channel. I'll see you in the next one.